Welcome back. Welcome home. It's Justin, your local real estate agent. I hope you're having an excellent, wonderful day. Let's talk. This is episode 3 and how to deal with these rising interest rates because it is what it is, yo. It is what it is. So today we got an idea that I think is both conventional, probably not thought of too much though, and it might be a great solution for you if you're thinking about making a purchase and still want to deal with these rates. All right, but before we get to that, let's do a quick market update. The more things change, the more okay, let's get started. So first, we're looking at Bronx last week. You'll see, boom, 18 new single families hit the market. We got 9 homes back on the market. A few price increases, beautiful. A ton of price decreases, which you will continue to see. A lot of expired, 15 sold, right? This trend is pretty much holding across the board. Condos, you could see kind of like a similar thing. A lot of price decreases. Nothing sold. We don't have as many condos though, so that's not too surprising. Co-ops are tough. Co-ops are tough. 22 new hit the market, 6 back on market. 29 price decreases, 22 sold though, so I'm happy to see that because we know what it takes to get through a co-op sale. There's a lot involved. Multifamilies, boom. Similar setup, similar scenario. 24 new, 5 back on the market. 21 price decreases. See the price, folks, price. So remember, we know how we always say location when it comes to real estate. We also got to start saying market, like the market conditions that we're in. That's why you're seeing all these price decreases across the board. It's not just the condition of your property. It's not just where it's located. It's also what's going on in the overall economy, the overall housing market. That will have a massive impact on your individual transaction. All right. So the greatest window we had for our sellers, that window's kind of closed, but you still are able to navigate through this market to get what you need. Just be open to some different ideas. Be open to price conversation with your realtor. We might have to do, seller subsidy, seller concession, buyers. Rates are higher. We're talking about how to deal with them. As we know, there's a little more inventory on the market now because you're seeing all these price decreases, homes going back on the market. So you do have a few more options now, but housing inventory is still very low. It is not yet a buyer's market. We're still in a seller's market, just not a super seller's market like we were in for like a year and a half. All right, let's get going with some news that you're hearing around the world. All right, the Feds, prices going up again, another rate hike expected. So this Wednesday, November 2nd, you can look to the Feds to see another potential rate hike coming. They're talking about 75 basis points, that's 3/4 of a point or a full point. So we might go up. We will go up most likely. This article is talking more about what might happen after the November meeting. Are they going to start doing smaller increases come December and going into the new year? We'll wait and see what they say on Wednesday. Hopefully they have more news for us then. But boom. With all these rates, what's been happening? Boom. Look at is this a headline too? The Fed is killing the housing market. I tend not to go into these, I'm not big on the headlines like that. Great clickbait though, but let's look at some of the details. Topping 7% for the first time since 2002. We're talking about mortgage rates. That's a big deal. I was actually talking to a lender of mine. We're going to have him in a video coming up soon. And he was just like, it's tough. And that's 7%. You might have to, pay some points, have great credit to get down to a 7%. So it's tough out here, folks. But that's why we got this video series. We're helping you out. Don't worry. We're going to get through it. All right. So now that's a 20-year high in mortgage rates. And we only expect them to keep going up. Boom. Mortgage calculator. Here's the idea we got for you. Dealing with these interest rates. Because it's not really about the rate. None of us really particularly care about interest rates. It's about the payment. Right? I got to worry about this monthly. So if we're talking about dealing with a monthly payment that we're responsible for, one unconventional/conventional idea is we go big. So instead of buying that single family house or that apartment, maybe we consider buying a multifamily. Now, this idea actually came from one of my clients because we started, how low the supply is. The rates jumped up again on us, then again on us. And she was like, why don't I just look to buy a multifamily? I was thinking about getting a multifamily anyway, maybe further down the line, but maybe that should be my first home. That way I have a some income coming in. I could build up equity, and that'll help with taking care of some of the monthly payment. I was like, gosh darn it, that's genius. Let's do a video about it. So, gosh darn it, you gotta. Anyway, I'm having a good time. So now let's get into we got two calculators out in the open for us, and I want to go run through the numbers with you really quick so you can get a sense of, does it actually make sense to go to the multifamily so I can get a lower payment that I'm personally responsible for on a month-to-month basis? Of course, you're taking out the mortgage, or you're paying the property taxes and insurance, the bank or the government or the insurance, because they're always coming for you. All right, so just this is landlord life. They're always coming for you. But if you do have a tenant or tenants in place and they're paying up on their share, that can help substantially with your monthly payment. It's not going to affect your rate going down, right? It's not going to create a rate drop necessarily, but you are going to be responsible ideally for less of that monthly payment, which makes things more affordable for you in spite of the rising interest rates or the high interest rates. So let's run through the numbers. Boom, we're buying a single family in the Bronx, but you can run these numbers for whatever market you're in, right? $600,000, let's say. 10% down, because 20 is hard to come by. All right, so let's say our rate is 7.5%. We're doing a 30-year fix. Property taxes is $5,000. I do love a property taxes in New York City, I gotta say. PMI 1%, because we're putting down less than that 20. Homeowners insurance $1,000. All right, so we got what? Boom, was an estimated monthly payment here of $4,725.76. Right, this is over the course of 30 years. Single family, $600,000. Let's move over. We're gonna do a two family for $800,000. Let me increase that homeowners insurance. I didn't like that number. $800,000. We're doing 10% down, so now we're borrowing $720. Excuse me, keeping that rate at 7.5. Another 30 years. Property tax went up $7,000. PMI 1. Homeowner insurance, I just $1,500. I just threw it up there. I'm assuming it's higher. Check with your insurance companies. With all these numbers, check with your lenders, but this is just for, an example for illustrative purposes to give you a sense of what we're talking about. So now, because we just realized I changed the homeowners insurance, let me just do the math again, because I had the math ready. I like to be ready, but I want to make sure I give it to you right. Okay, so we're talking about a difference of $1,616.92. So if you're buying that two family for $200,000 more, still staying with a 10% down payment, that's $20,000 more out of pocket, but it's still only 10% of the purchase price. And versus that $600,000 single family, we're talking about $1,616.92 more that you're paying per month for the multifamily. I shouldn't even say two, because it might be a three, who knows? The multifamily versus the single. But now, let's think about rents, because or you may know, you got a two-bedroom apartment for rent in a lot of the Bronx, pretty much anywhere in the Bronx, and it's in decent enough condition, your rent will be higher than that $1,616.92. If it's a three-bedroom, forget about it. $2,500, $3,000. It's going to vary depending on the neighborhood that we're in, but it's going up. So that payment that you're getting from your tenants will help cover, right, the difference. Will cover the difference between going from a single to a multi, and then also leave some money left over. Let's assume, argument's sake, you got a three-bedroom apartment that you're renting, and you're renting it for $2,500. I know you're like, hey, I can rent it for $2,800, $2,900, $3,200. I know, folks. I know this is just illustrative purposes. All right, so that gives you a monthly difference of $883.08. So we're just gonna say $880. You got a quote-unquote extra $880 coming in every month that can be applied, or most of that can be applied to the rest of your mortgage payment. So now you're paying less of that mortgage than you would be if you just bought a single family. This is why people are always, looking for multis. One of the big reasons is to make the payments easier on themselves. They also, if we're talking about all other things being equal, they're also typically worth more than a single family, because it's more asset that you're buying, has more uses, including the business purpose of renting it out. So long-term and short-term is going to be typically worth more. And then also in the short-term to the long-term, it's bringing you an income ideally, which you wouldn't be getting with your single in most or many cases. So this is a way to help reduce that burden that you have to deal with. because now you got a tenant helping you out. So what are some potential downsides? They're the same potential downsides that are always there in the landlord life, right? Maintenance. So I know I said $880 extra, but remember, you got to do maintenance for your tenant. So things might break. You're going to be responsible for repairing them in most cases, or if it's normal wear and tear, you're expected to replace it. There's going to be a larger water bill. You're probably going to have to cover that, assuming that you don't have separate water meters. What else can come up? Non-payment could become an issue. There's tons of things under the sun that can come up in this scenario, right? But of that extra $880 that you're getting every month, you say, hey, I'm gonna keep $300, $400, whatever amount you're comfortable with, set aside just for things that I expect to happen, whether I have to replace something for the future or deal with some sort of other issue going on. So I have that money set aside every month, building up a little housing fund just for my rental unit or units. And then that other $400, $500 that's free, that's just gonna go cover straight to my mortgage. That's how you do it. This is kind of like a best of both worlds scenario, ideally. So you're saving some to help cover that. And then, of course, you're going to be taking care of the mortgage that you have to take care of anyway, whether you're buying a single or a multifamily. Of course, this is a $200,000 price difference, right? In this example, your numbers may be different, right? If you're buying something that's a multifamily that's $300,000 more, but it's a definite 3-family, now your numbers are different because although the price is higher, you're going to have 2 units to rent out, presumably. So that means more income. If it's only a $150,000 gap or $100,000 gap, now your numbers will definitely look a lot better because you're going to have rental income and a lower monthly payment. So who should you be talking to if you're thinking about going this route? Definitely talk to your lender, see what the numbers look like from one scenario to the other, see if it makes sense, if you can make the jump to a multifamily. They're going to factor in the fact that you're going to have some additional income, right? So that'll increase your debt to income limits, and that usually means you can qualify for a higher amount in your pre-approval. Talk to your realtor. Hey, what's out there? What can I get at this price point with the pre-approval my lender just gave me? What do you think the unit can rent for? Can you help me with securing tenants after the purchase? All stuff that you should be asking us. I know I myself be happy to assist my clients. I've done it many times already, where they bought a multifamily and then wanted to rent out the unit that was available. I helped them rent it out. Actually, I had one client, he bought 2 multifamilies in the last couple of years, and I helped them rent out the units both times. So, folks, this is another idea. Just how we're getting that payment down. Don't have to do it, but consider it if you're thinking of becoming a landlord anyway, if you're thinking about the equity, the business part of it. Also, you're going to have some more tax write-offs, presumably. Check with your accountant. I always got to add my disclaimers in there. You know that. And see if this is something that might make sense for you. Instead of single or instead of apartment, go multi. All right? So thank you for joining us. We'll have part 4 coming up soon. I think we're going to have a lender with us for another special program we're going to talk about on how to deal with these interest rates. And if you have any questions or concerns, drop them down in the comments below. Thank you so much. Talk to you soon. Bye.